Hello, it's Friday, November 19th, 2010, about 10 after 4, and this is the daily S&P 500 technical analysis update being brought to you by freechartvideos.com, using time-honored techniques to understand modern markets. This video is for educational purposes only and is not intended to be used as any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I'm not a licensed professional, just a guy that draws lines on charts. So let's look at the S&P 500. I want to remind you again about the big picture. And the big picture is we had this April high. And the April high led to the flash crash that actually took down prices down out of the ascending channel that had been working for about a year. And then we formed an inverse head and shoulders pattern, pretty clear. Left shoulder, head, right shoulder, that broke out and has now spent 2 months in a channel, broke out of that channel. At that point, the $64,000 question became, are we breaking down out of this channel in order to reverse, come back and test support, maybe this neckline, or did we do that so that we can consolidate sideways and then resume a move upwards? And you remember this pattern points us to a price or a level that's between 1240 and 1250, and we have not made that yet. I believe we will. So this is the big picture. This is the big driving thing. This is a pattern that took about 4 months to form, and this is a large and technically important pattern. So let's look at a little bit closer detailed action on what's been going on for the past couple weeks. This is the about the last month's worth of trading, and you can see here's the top boundary of the channel, the bottom boundary of the channel. Briefly, prices got above that channel. I thought it might have been possible at that point to go on up to the 1240, 1250, kind of like a climax top, then come back down to test some support at levels lower than where we were earlier in the week. But that aside, we did not go up that high. Instead, it just traded briefly out of the top of the channel. And remember, when upward channels break to the upside, prices very easily come back down. You do not find support on the top rising channel if you have an upside breakout. Conversely, we started this channel trading down for about 7 days. Then it broke down out of this. And the reverse is true. When prices break to the downside out of a descending channel, they don't have that much trouble getting back up into that pattern. And that's what happened. So the past couple of days, we've had nice, strong action out of the markets. Now you remember, if you saw the video yesterday, you may recall that I mentioned we may be making a move back to back test this top line of this descending channel that's marked out in red here. And look where it bounced. You know, we came up yesterday into that channel, took out the top line, spent much of the day going sideways, then started to slide down this morning. Again, started with selling. It tried to get through this line, but it just couldn't do it. and then prices started to rally. There's an additional line that I'm going to draw here. Anytime I see a peak like this that happens outside of a channel, you can see that obviously we're above this line, this top red line. But I thought to myself, well, let's take this peak and let's draw a line across that and see if that line shows us anything of technical importance. And clearly, I mean, this is a short-term look at things. But if we get in here a little closer, you can see that after, it wouldn't break here, but that's what defined this orange line as the second point. Came back down, back tested this line, came up, had a little trouble, broke over the top of it, went sideways, back tested this orange line, and ended the day on a strong move. Just looking at this tells me I suspect that unless something critical and newsworthy occurs over the weekend, Monday should start off as an up day. And it looks to me now like the next move we're going to make is going to be to test this line that was the broken rising support line in that channel that lasted for about 9 weeks. So I think prices are destined for an 8 to 10 point gain perhaps on Monday. And if that's the case, let's see what happens when things get here. Again, we did not meet the 1240 to 1250 minimum price target out of that inverted head and shoulders. Prices may climb back up into this channel. That's, to be honest with you, that's going to be a tough thing to do, because this now will act as resistance. However, this is a pretty strong move off these lows, and we have broken this. So at the very least, I'm pretty comfortable in saying that that this line now will hold as support. Watch this line. This also may become support. So all of that says, if we do not get above this line, I believe we are destined for some sideways action to consolidate and then head back up and meet that 1240, 1250. You might notice this kind of has a head and shoulders like shape to it. I don't know that I'm willing to call it that at this point, because it really didn't form much at the bottom of anything, but who knows, it may act that way. If that is the case, then we may get back up into this channel and may get up to 1218, 1224, something like that, depending upon what day that takes place. It's also possible that that we make that mark, but we do it out into the future, a number of days, and still stay underneath this line. So anyway, I hope this has helped you out a little bit. By the way, I've got a new little written piece on the website in the opinions section, and it tells you why I'm a bull in this, quote, bogus market. And you have to read it. I hope this is helpful to you. Please subscribe to my channel. Go to the website at freechartvideos.com. This is free. I depend upon your traffic and the sponsorships on my website in order to keep it free. So I appreciate your visit, and good trading to you.